You're listening to The Pilot's Portfolio, formerly called the Pilot Money Podcast. To learn more about the name change, join us in Season 2.
It's near impossible to buy a 172. Period. And if you find one, I knew someone who's putting a 172 back into a flight school. They bought something with hail damage. It had a new engine, which is nice, but it had hail damage and it had a hard landing, so it had the nose gear replaced. And they still spent multiple six figures to buy that airplane.
You're listening to the Pilot Money Podcast, the show dedicated to guiding professional pilots towards a future of financial success and stability. Fly along with your host, Timothy P. Pope, as he provides financial planning insights and answers to your burning questions and dives into real-life stories from fellow pilots who share their successes and cautionary tales. The Pilot Money Podcast takes off now.
Welcome to the Pilot Money Podcast. Today, we get to talk about a fun topic. It's not fun just because I get excited about it. Look, I will acknowledge I am a personal finance nerd, so I probably get excited about things that you guys do not, and that's okay. But I guarantee you that today's topic will get the juices flowing for sure. As a pilot, how many of you have said to yourself, I wonder what airplane ownership would be like? So today, we get to talk about how to buy an airplane. So for those of you just joining, my name is Timothy P. Pope. I'm a certified financial planner specializing in the planning needs of the professional pilot. Welcome. I am glad that you are here. I also want to say thanks to our regular listeners and particularly those who have sent in questions for our Q&A series. We love doing those series. In fact, I'd love to do them more often. To be honest with you, I'd love to see if we can make the Q&A series a regular part of the Pilot Money Podcast. So you guys can ask financial questions that are top of mind for you. You can get answers, and it's not coming off of TikTok or YouTube or a talking head on CNBC, but somebody who's thoughtful with a pulse on the industry and who works with your fellow brethren in the flight deck. So send us your questions, pilotmoneypodcast@ceterainvestors.com. The email address is going to be in the show notes. So send us those questions. We'll get you answers to the financial topics that are top of mind for you. So without further ado, let's dive into today's conversation about buying airplanes. And because it's an interview episode, be sure to stick around for the debrief at the end. Well, ladies and gentlemen, we've got Preston Holland, Chief Commercial Officer of Flying Magazine. You guys have so many brands. What is included under your purview?
Yeah, so my group handles the Aviation Finance Division. We're a part of a larger company called Firecrown, and Firecrown is a conglomerate company. We own Flying Magazine, Aviation Consumer, IFR Magazine, AvWeb, Airline Geeks, and a slew of other media publishing titles in the aviation space. And so I run our Aviation Finance Division. We help aircraft owners and future aircraft owners finance their aircraft, anything from single-engine pistons through Fortune 500 business jets, and everything in between.
That's awesome. I was excited to have you on the Pilot Money Podcast. And of course, welcome to the Pilot Money Podcast. Flying Magazine is such an iconic brand. If you're in aviation and you're a pilot, about flying. Now, before you were Chief Commercial Officer, you were also Chief Operating Officer as well for the group. So let's start with this. Give us a little bit about your background and then tell the people what a Chief Commercial Officer is responsible for.
The way that I got started in this whole journey was a friend of mine. He called me, Craig Fuller. He's the CEO and founder of Firecrown. He gave me a call and said, hey, look, I'm buying Flying Magazine. I need someone to come help me and kind of be in the core inner circle group. And so I said, absolutely, that sounds like fun. My dad grew up as a pilot in the 80s, flying bank checks and overnight kind of express stuff, in Barons and Bonanzas and, kind of running the freight dog life. And so he told me stories about his adventures. He didn't pursue aviation professionally after he and my mom got married, but he did that for a little while out of Atlanta. So he flew out of PDK and Atlanta and all those little airports around to Columbus, Ohio, and to Miami and to middle of nowhere, Mississippi, and things like that. And so I grew up with tales of aviation kind of in the blood. When my brother came home from the hospital, actually, there is a picture of me. I'm 3 years old, my brother, a newborn, and there's a flying magazine sitting on the coffee table in the picture. So aviation has been in the blood for a long time. And when I got the opportunity to join in on the media side, I said, absolutely, this sounds like an excellent opportunity. And so I came in, I was the vice president of product development. So basically, when we acquired the magazine, we like to say that at the time, we were a 100-year-old startup, right? So Flying Magazine's been around since 1927. This was 2021. And so, it was 90 something years old at that point. But we had to build systems kind of from scratch. And after about 8 months of doing that, Craig came to me and asked me to be the chief operating officer, which meant that I was number 2 at the company. Basically, the rest of the company kind of reported up through me, and then I reported into the CEO. And did that for 2 years as we kind of went on a roll-up spree. One thing that we recognized early on, so flying, you've got this kind of headline brand. It's the household brand. Everybody knows it. Call it the statement of record for aviation since 1927. And that's everything from space race through airliners, through business jets, general aviation, gliders, hot air balloons, right? Everything that flies, flying kind of encompasses that. One thing that we realized was that there's all these little kind of, so aviation's a niche, right? You and I know this. We go to a dinner party and there may be one other pilot that might be there, right? Maybe. And how do you know that there's a pilot in the room? Don't worry, they're going to tell you. So you were easy to spot, right? But we saw all these kind of, call it sub niches inside of aviation. And we said, they were part of these big conglomerates that didn't really understand aviation. And so we made our first acquisition in 2022. And after Flying, so we acquired Flying in July of 21, second acquisition in May of 22. And that kind of got us into the two-sided marketplace business, right? So you think of the controllers and the traded planes and, those types of things. Well, we acquired one of those competitors, which included Aircraft for Sale, Aviators Hotline, Business Air, and a slew of other kind of micro publications. So get us into the buying and selling space. And then as we started buying up titles, everybody kind of said, hey, we would love for you to take a look at this. And so we spent 2 years kind of doing a roll-up of a bunch of different aviation publications. So AvBuyer, Aviation Consumer, AvWeb, IFR Magazine, Aviation Safety are all a part of one central family. And the thing is that because our leadership team and our executive team at the time and still today consists of a lot of pilots and people who fly airplanes, they understand the industry. We understand the investments. We understand the persona of the reader, right, from a corporate level, not just at the individual title level. And so as we kind of created a platform that empowered those leaders inside of the individual publications to then create the content that the audience really wanted to consume, we really found that they were able to flourish within our platform of companies. And so as we kind of started to bolt all of those together and being in the two-sided marketplace business, we're getting closer and closer to the transaction. When we acquired an aviation finance company, it kind of was the natural next step, right? So we have people reading all of our content, doing the research, right? They're reading Flying Magazine, they're reading AvWeb, they're reading Aviation Consumer to be a more informed buyer. Well, now how do we help them in kind of taking the next step? And so the aviation finance business was a really natural add-on for us. And so when we acquired that business, our CEO came to me and said, okay, we've spent the last 3 years really putting together this media powerhouse and having all these engaged users and engaged content. As we kind of build out this other arm of the company, he asked me to move over into that side and really, again, not cold start, but really, take something that was small and really use the media platform that we have in order to grow that business. And so I took that over in September. I'm now the chief commercial officer, which is a fancy title to say that the team on the aviation finance company report into me. I run that division. And basically we help people buy airplanes by using smart, intelligent debt in order to acquire the aircraft. We've got over 100 lenders on our platform that are able to do aircraft. And the big difference between us and your local bank is when you go to your local bank, they got your car, they've got your RV, they've got your house, all of those, no problem. They've got your boat, they've got your motorcycle probably, all those, no problem. You say, hey, I'm buying an airplane. And they say, we have no idea about airplanes. What's a logbook? what's a high wing, what's a low wing, what's a single engine. We have no idea, right? So they say, nope, we're out, right? I like to say we know the difference between that an SR22T is a turbo aspirated, not a turbo prop, right? And so that's something that a lot of local banks don't understand. And so we're able to offer more competitive terms in the marketplace than most people's traditional banks.
You shared a lot there. Thanks for that background. So before we jump to the aviation finance side, let's talk about aircrafts for sale, right? So you guys did this buying spree. I was seeing it. I'm a subscriber for flying. I check it out. I go to aircraft for sale, right? Looking for dreaming right now. Yeah.
What's your ideal airplane? I mean, I think the users all want to know what, if you had an unlimited piggy bank, what are you going to get?
DA62, man. DA62.
He knows exactly what he wants. It's a great airplane.
I've got a picture there and a picture there that my kids have drawn for me. And they're like, Dad, when are you going to get your DA62? And it's like, son, these things take time. These things take time.
Patience.
That's right. So talk to us a little bit about aircraft for sale. And then we'll talk about, financing aircrafts and things. Because look, the reason that I reached out to you is because pilots, they like their toys, right? And not only do they like their toys, but a lot of times they're in a financial position to acquire those toys in a smart way. And so I wanted to share with the listeners how flying supports that.
Yeah, for sure. So we own aircraftforsale.com, which is one of the world's best domain names. It's quite straightforward. When we acquired that domain name and that company, they had really taken a print first approach to the aviation buying marketplace. And the funny thing about print is that in aviation, there is this affinity towards print that does not exist many other places in the world, right? You think about paper charts, you think about there's a lot of paper that goes into being a pilot, right? And so there is an affinity towards the print product. There was a famous yellow newspaper that went out of print. There's a bit of an uproar in some of the pilot community because they really like to engage with that. And one thing that I like to point out to people is most single engine airplanes, if not all, don't have Wi-Fi when they get up there. So what are you going to do, right? You're flying cross country and you're sitting up there. And at some point you get tired of looking around and identifying airports and maybe talking to the person next to you. And maybe you've cranked through all the Sirius XM channels and you said, okay, well now what am I going to do, right? So engaging in a print format is really easy, right? You don't ever lose connection. You don't ever run out of battery, all of those kinds of things. So we brought back a newspaper style buyer's guide in print, right? So Aircraft for Sale is a print product. You can find it in almost every FBO across the country. And if your FBO doesn't have it, you can shoot us an email and we'll make sure that your FBO gets it. And you can engage with that in the print side. But the other piece was that we were going to make significant investments into the digital experience because buying an airplane, frankly, is so antiquated when it comes to buying online. There's no idea around damage history. There's really no such thing as a Carfax for airplanes. There is Blue Book, Aviation Blue Book. A lot of times you have to be a subscriber and sometimes the data is, a little bit outdated, or it's a really expensive subscription that how we buy RVs and cars and boats and motorcycles and the rest of, call it these tangential markets, is totally different than how we're buying airplanes today. And so we hired Ian Hoyt, who runs Aircraft for Sale. He's our director of marketplace. He came from RV Share, which is a two-sided marketplace for RVs. You may, for those that camp at Oshkosh, might have utilized the service. And so he came on and he basically reimagined what that digital experience could be. Because one thing, again, that we all have in common is we've either been shopping or bought airplanes. There's a lot of people in our group that have done both of those things. So we are the consumer for these products that we're making. We're not just some engineer at some company that's creating a two-sided marketplace and that says, okay, well, here's what you need. We said, okay, if I was buying an airplane, I would want fill in the blank, right? So we launched a TBO gauge, right? So that you can see time between overhauls on the listing, directly on the listing, right? We created plane price, which is, call it the Car Guru's shopping experience for buying an airplane.
So tell the folks what plane price is, because I was on the website and I was like, oh, this is nice. Like other brands don't have this. And I'd want to know more about the metrics. Tell the people what that is.
Yeah. So plane price, it takes about 4,000 data points and creates a machine learning wrapper on the back end that basically says, based off of the current market today, it refreshes about every 2 hours. The entire data set refreshes and turns over, but it really looks at the entire marketplace and says, let's say the 172 mic market, right? Based on what we know about this market and the aircraft that are currently for sale and the aircraft that we know that have transacted, this aircraft falls within a range that we think that would be an acceptable purchase price. Now, sometimes that range can be wide if we're not very confident. It can be very narrow if we're confident. And it takes things into consideration like TBO times. It takes things into consideration like what type of panel does it have in it? What's the interior score? What's the paint look like? It really takes in a lot of those different things and then aggregates it, creates a scoring mechanism, and then says, this is about how much we think. So let's say somebody's asking $125,000 for an aircraft. And we said, hey, we think it's probably worth $119,000, right? We would qualify that as a fair deal, right? It's within a standard deviation of being a right asking price. You're probably going to end up coming somewhere in the middle. Other ones that we say, hey, we think that this aircraft's actually worth $180,000 and they're only asking $110,000. Well, that's a great deal, right? Now, it's a great deal. You need to do your due diligence, and plain price is not the end all be all, right? There are things that can be hidden or put back, but we try and have an honest opinion, right? To say, and it's really to use as a stepping off point to say, hey, look, we're in the range. Now you need to go do your due diligence to kind of take the next steps. And so plain price is its own product. We've got a couple of exciting launches coming up that I'll have to come back on it and we can talk about with plain price. But we really are trying to help the consumer be more confident in the aircraft that they're buying. And that way they can say, okay, I now know without a shadow of a doubt that I'm not getting gouged on it, right? Because of all these things. Because especially in the piston side, I mean, in the jet side, there's so few transactions and a lot of that is really gut feel, right? And it's how much am I willing to pay? On the piston side, though, there's just so much opacity around the pricing of an aircraft. We're really trying to break that down.
Yeah, I think that is a really nice feature because you can immediately see, hey, based off of your metrics, where this piece of equipment comes in. And then you can start to do your due diligence if you really like it. Definitely, we're talking about airplanes. You definitely want your pre-buy inspection and so on and so forth. As we're talking about being in the marketplace, we're a couple of years past COVID. The past couple of years saw just inventory really dried up in the single engine piston space. Like, how has that changed? Has that changed comparing a couple of years ago to now?
I think that we're coming off of a high. I don't know if we're ever going to retest the lows of, call it 2018, 2019. I think we may be in what we would consider a new normal, right? So you think about, you've got a supply and demand piece at play here, right? So during COVID, you have all these people that may not have been aircraft buyers in 2017, 2018, because they weren't really thinking about it. They said, oh, well, I'm fine flying Delta. I'm good. I live in a hub city, whatever. But then during COVID, everybody started saying, well, maybe I don't want to be in a giant tube with a bunch of people. You had a lot of new pilots, owner-flown pilots come into the market. At the same time, you had this mass retirement at the airlines and this pilot shortage that had been created because of that vacuum, right? So there's this interruption there. So the training market all of a sudden starts getting inflated because flight schools need airplanes to be able to have people build time. You have all these owner-flown pilots that are also coming into the market at the same time saying, well, I want to learn how to fly in this 172, then I'm going to go buy an SR-22, SR-22T, what have you. They're going to start their pilot journey as an owner pilot, right? So you have these two forces that are pushing the price up because we know in the basic laws of supply and demand, if demand is higher than supply, the price is going to go up. If supply is higher than demand, the price is going to go down, right? So this very natural price expansion happen in the market. Now, not necessarily a great thing for those of us looking to buy something in the 172, 182 market, call it the Piper Archer market. And so you had all these new entrants into aviation. At the same time, you have the pilot shortage. So you see prices start come up. Oh, at the same time, interest rates were basically 0%, right? So you could get money for the price of the treasury. If the treasury is at 0, your rates are at 3%, right? So for those of your users that don't really understand how debt markets work, is there's these benchmarks that the banks look off of, and they're taking a spread over top what they can borrow at. So the bank can borrow from deposit holders or from the Fed at 0%. They're going to have a 3% spread or a 2.75% spread. And that's how the bank makes money. So that means that you're seeing, the interest rate that you're seeing is just whatever the point is above the spread. Well, we're now at 5.5% Fed funds rate, right? So 7.5%, 8% that's where the bank's making money. It's the same spread over the federal funds rate as it was back then. It's just the federal funds rate has gone up 5.5% in the last 20 months, right? So it's been a very rapid increase. And so you have those two things everybody can buy. You got all this frothy money in the system, right? And all this, is why Bitcoin went through the moon, and you could buy an NFT and like stocks, GameStop, you're watching it happen again this week, where it's like, you have all this like unnatural stuff happening in the market. So you had all of those forces combined is just increase the price, because you got demand, people with money want to buy the airplanes. So it's gone up. Supply has started to come back online, especially this year in 2024. We started to see an increase in supply. Now, there's still micro markets that are experiencing significant compression. The 172 market, it's near impossible to buy a 172. Period. And if you find one, I knew someone who's putting a 172 back into a flight school. They bought something with hail damage. It had a new engine, which is nice, but it had hail damage and it had a hard landing. So it had like the nose gear replaced, and they still spent multiple six figures to buy that airplane. So it's like the 172 market and the training single engine piston, especially the used market, is still on fire. You still really can't get much in that supply, but you are starting to see some tangential markets that are starting to have a little bit of supply come back on. You're starting to see the Bonanzas come back online. You're starting to see the 182s come back online, the 210s come back online, the SR20s come back online. So it's like you have this supply kind of building in these individual line, make, model lines that are starting to come online, which is suppressing the price a little bit, but it's not nearly at the rate I think that anybody was expecting. I think everybody was thinking, okay, so get out of COVID and interest rates go up, which is going to take out a certain portion of the buyer pool. All the prices are just going to crater. They haven't yet. I don't think that they are. Everybody that I talk to that's in the transaction space is saying, hey, look, we thought by now we'd have lower prices, significantly lower prices. We don't. So it's starting to give indications that we may be testing the new normal on the low end. I would say if you're a potential plane buyer and you're saying, hey, I'm going to sit on the sidelines, try and find a great deal, you may be waiting a year and a half, right? So if you're really wanting to actually move on an aircraft, now is probably a decent time to make it.
Yeah. So the stories that we hear of where you're able to buy airplanes for super cheap, that's not happening anymore. We got to bring cash to the table if we want to play the game.
Yep.
So with that, I think that's a really good segue in what you do, and you help would-be airplane purchasers to finance the aircraft and to close the deal. I was looking on the website and it said an applicant potentially can see funding 6 times as fast or 6 times faster than a traditional bank. So how can the team at Flying Finance complete the deal so quickly?
Yeah. So one of the things that we have is we have airplane experts on our team, right? So instead of you going back and forth with a banker that has no idea what a logbook is, has really only looked at 5 or 6 of them in their entire life and says, I have no idea. I just know that my parameters are right here. And so it has to fit inside of this box. We have airplane people on our team, right? So I like to tell people, your bank probably does not understand the difference between a turbo aspirated piston engine and a turboprop engine. They just see the word turbo and they assume turboprop, right? If they even know what a turboprop is, they may say, oh, it's one of the ones with the propellers, right? So it's totally a different skill set from, you have like your traditional bankers. If you go to your personal bank, like I said earlier, that does all of your other lending, and you go to them and say, hey, I'm buying an airplane, 9 out of 10 times they're going to look at you like you've got 3 heads. And then if they do know the airplane, chances are they're probably not going to offer you what we would consider market rate, right? So market amortization terms, market interest rate, market down payment, right? I have one client who came to us. They are a strong W-2 earner, a great credit, if you will. So somebody who should be approved wherever they want to apply. And they called me and they said, hey, I just want to gut check my rate, right? They're a friend of mine. They knew I was in the business. They're like, hey, I'm not necessarily looking to work with you guys, but I just wanted to gut check. And absolutely, I'll do that for anybody, right? Feel free to reach out to me and say, hey, just a gut check. I want to see if I'm in market. They were getting a 10-year amortization. It was 30% down, and their interest rate was in like the high 8s. Market for that airplane was 20% down, 20-year amortization, most likely, if not 15-year, and somewhere in the mid to high 7s. So across the board, their local bank, in which they have deposits, they have multiple loans with, they have a great relationship with, was not giving them what the market should give for that given aircraft, right? So we have a team that understands the airplane. We understand the questions that we need to ask, especially for, when we work with airline pilots or owner flown, folks that own their own businesses, we know the documents that the banks are going to require. We outline that for you upfront in the process. We say, look, your airplane purchase price is this, and the type of aircraft you're buying is this. Your profile is this. Here's the documents that we have to have. We're going to get them submitted. We can have pre-approval by the time we have all of your documents in. We can have a pre-approval turned around in 48 to 72 hours, kind of depending on what your goals are. That arms you with the power to go buy the airplane. You go talk to the seller and you say, hey, by the way, I've got a pre-approval letter from Flying Finance. I'm ready to go. Whenever you're ready to go, get me the logbooks. Our team reviews the logbooks. If we see something that could cause a red flag down the road, we call it out. Immediately, right? We say, hey, by the way, you're missing this chunk of logbooks. We need to ask if we can get them. If we can't, this is what the process is going to be like, right? So we keep you involved in the entire process. And because we have airplane people, we're heading off the questions that the underwriters and the lenders are going to have, because we say, look, we look at these every day, all day. Airplanes is what we do. Our director of finance, Keller Lassiter, he is an ATP rated CFII. He flew right seat in ERJ 175s. So he gets it, right? And he knows airline pilots. He knows the persona. Kimsey Bell, who's on our team, he's a CFI. He's a graduate of Middle Tennessee State. Both of them are actually. And they understand airplanes. They've read logbooks. They've actually done the maintenance themselves. So they know what to look for. And when we know what to look for on the front end, that accelerates the process in the back end. Because then at that point, all that the lenders and the underwriters have to do is say, yep, looks good, makes enough money, not too much debt, approved, let's get it closed.
I appreciate you breaking that down for me, because I read that and I'm like, well, I had the question that I asked you. I was like, hey, does this come from, you guys have better technology? Is this the knowledge of the industry? Is it relationship with lenders? I think you said 20 lenders on the platform, or 100. That's a big number. How many? We
have 100 lenders on the platform. Realistically, you'll probably end up doing a deal with about 20, but there's random one-off circumstances that would be a perfect fit for some other lender, right? So, but we utilize technology. We have an online application. We have an online document uploader. We send you a link and we say, hey, throw your files in here. That way there's no risk of your information being leaked. You throw it into a secure upload folder. We organize that file on the back end using some technology that helps create that picture for the underwriter. The online application, surprisingly, is not totally common in this industry. Not every aircraft finance company has an online application, and we are obsessive to make it really easy to use, right? It's easy to use on your phone. You can totally apply for a loan on your phone, autofill, whole 9 yards, right? We try and make the process as easy as possible, use the technology, and then we also use our lender relationships because of the brand that we have in flying, because of the volume that we do, right? We're one of the top aviation finance companies with most of the banks that we work with, which means that if something starts to go sideways and we need to make a phone call and say, hey, by the way, we need help here. We need to know, what's going on. How can we get this done? I have a client that we're working on right now to refinance their aircraft. They worked with a local bank. It took them 60 days to get to the closing table from the time that they engaged the lender to the time that they got to the closing table. Why? Because the lender didn't understand airplanes. The lender only really understood credit. So they were done with credit underwriting in like a week, where the airplane took another, 50 days to actually get underwritten because it had to go to somebody who worked in another office, who knew airplanes, who could read the logbooks. And then they said, hey, by the way, we need to ask this. Oh yeah, no, we need to ask that. Oh, and by the way, they didn't even have competitive terms. So part of the reason why we're refinancing it is they took 60 days to get closed and interest rates high. Their amortization is low. The down payment was really high. So it's like, we really try and help accelerate the process. And we'll tell you, hey, look, by the way, your package is unique. So therefore, you need to be ready for this to take another 2 weeks than what we're expecting. We'll go ahead and set close date. We also work with everybody in the transaction, right? If you introduce us, we'll work directly with your insurance agent. So you don't have to call your insurance guy and say, hey, by the way, this is the documents we need. We play this game at telephone. Your tax guy, if you got tax needs, we talk directly with your tax guy to say, hey, here's what we have to have. We talk directly with the escrow company to make sure that they're set up, they're ready to go, the lien's ready to go, registration's ready. Like, we help coordinate and facilitate that entire transaction so that ideally, once our clients get us all the documents, they have to sign a DocuSign and then they're going and picking up the airplane.
What stands out to me is that, yeah, we have the technology. Yeah, we have the relationship with the lenders, but it's your just depth of experience in the industry that is spread across your teams that has allowed you to build a process that's going to be efficient. You guys know what you need up front, and boom, you're off to the races. And I think, just this is different, but related, as financial planners that specialize with professional pilots, we do the same thing for our clients because we know your industry. We know what your wealth engine is. We know what your contracts are. We know what questions to ask. We know what data we want to give you an accurate picture and projection, right? And so I think that industry knowledge makes a huge, huge difference. Now, my listeners are going to be upset because I've taken so long to get to it, but let's say we've got, a client who's thinking about buying an airplane. They're thinking about financing a portion of it. What terms should they be expecting as it relates to down payment, terms of the loan, the range of interest, right? Amortization you hit on, which maybe you can tell the listener what that means, and then insurance requirements. Maybe you can talk to that.
I don't think that we're getting interest rates going down. So as of today's market, so the single engine piston space and the turboprop and the jet space, all three have different kind of market factors that go from a debt standpoint, right? So for the purpose of this conversation, we'll push off the turboprop and the jet conversation, just not super relevant. If you have interest in getting into a jet, or maybe you're chief pilot, or you are a chief pilot, you're really close to your principal, you want to talk jets, shoot me an email. I'm happy to kind of break down what that market looks like. For the purpose of this podcast, we're going to focus on single and multi-engine piston, right? And we'll focus on land as well. Seaplanes are a little bit tough to get done because your lender pool that will do seaplanes is a lot smaller, right? So seaplanes expect a 1% to 2% interest rate increase from any of these numbers. So anyway, so that's kind of to give us a framework. So as we look at the experimental market, let's call it experimental and LSA market, which is a really fun and exciting market. I think personally that the LSA market is going, once if Mosaic passes in the way that we know it to be, and the weight increases and the speed increases happen, I think the LSA market is going to be a very viable market for the fun toy for airline pilots, because they're going to go fast. They're going to have enough weight that you need. You can haul your family around if you have a small family, right? So in the LSA market, probably expect a 15 to 20 year amortization. So what does amortization mean? Amortization means you are going to pay as though the length of the term is that long. So if you think about a mortgage in your home, if you take a 30-year mortgage that has a 30-year amortization, your term is 30 years and your amortization is 30 years. So you're going to pay X dollars per month until the end of the term, right? So if the amortization and term didn't match, let's say you had a 5-year term and a 30-year amortization. For 5 years, you're going to pay as though it's stretched out over 30 years. So let's say it's $1,000 a month over 30 years. You're paying $1,000 a month for 5 years. And at the end of the 60th month, you've either got to pay the balloon payment or you have to refinance out into the rest of it. So amortization is, what's my monthly payment going to look like over the term of the loan? In the single engine piston market, kind of market standard is either a 15 or a 20-year term and a 15 or 20-year amortization. There are some lenders that will do a 5-year term, which means at the end of the 5th year, you've got to come up with a solution. We have plenty of clients that will actually just refinance them in the 4th and a half year, stretch it out again, no problem, doesn't see any increase or decrease in monthly payment. It's just, hey, we're just going to continue on a 5-year term. But 20-year amortization and 20-year term is quite achievable, especially in the single engine piston space. Rates today are going to be anywhere from 7.1%, 7.2% up to 9.5%, depending on your credit worthiness. Now, what does credit worthiness mean? How much debt do you have? What is your debt to income ratio? What is your history of payments? What is the type of aircraft that you're buying, right? So that does tie into it. Like I said, experimental kit builds expect a 0.5% to 1% increase. Seaplanes expect about a 2% increase. If you're flying an aerobatic airplane, we have an airline pilot right now buying an aerobatic airplane, which is kind of ironic, right? You don't want your airline pilots flipping the airplane upside down, but they're buying it. They're buying one of those. His interest rate is about 8.5%, 8.9%, because in that aerobatic market, the lenders perceive a little bit more risk, right? And so expect to come to the table with 15 to 20% down, depending on how much you're borrowing. So if you're borrowing over 150,000, expect to come to the table with 20%. Anything under that, you can probably come to the table with 15%. So 15%, 15 to 20%, you're looking at between 7.2 and 8.5, 8.9, and you're looking at a 15 to 20 year amortization. So we actually have a finance calculator on our website. So it's Flying Finance. Up at the top, there's an aircraft loan calculator. Click on that. That'll take you. You can calculate, you can play with some of those numbers, play with your down payment. You can play with the amortization, play with the interest rate. We try and get it close to, what you can expect market rate wise. That'll tell you how much you have on a monthly payment. Now, one of the things that a lot of our clients don't realize is that when you put the down payment, you may have, let's say you've saved up $100,000, right? You've got $100,000 in the account. You want to come to the table. You want to buy a $200,000 airplane. In aviation, it's backwards from buying a home. If you put more money down, your interest rate actually goes up, which is totally backwards to what everybody thinks. They say, oh, well, I'm only putting 50% down. Your interest rate actually increases because at the banks, they want to do one transaction and not have to do 3 transactions to equal the same size. So your rate actually kind of creeps up if you do more money down. The other piece is that the bank is calculating into your global financial picture how much cash reserves you have in the event that something were to happen, right? Let's say you lost your job. The bank wants to know how much coverage you have during that time period. So you want to be fairly liquid when you go to buy the airplane. That way you have a really good shot at an approval, right? I'm sure that you've got clients set up on IRAs and you've got them set up on different retirement accounts. Unfortunately, that doesn't count towards your liquidity in this situation. What does count towards liquidity is an untapped home equity line of credit, right? So let's say you have a $50,000 HELOC as a safeguard. You haven't hit it, you haven't touched it, there's no actual money taken out of it. That can be seen as liquidity. What happens in the worst case scenario? The banks are writing to the worst case scenario. It's not what I'm going to make next year. It's what I'm making right now.
I've got a couple questions on that. What a brokerage account?
If it's non-penalized, a readily marketable security, like let's say my Robinhood account or my TD Ameritrade, that's Charles Schwab now, I guess, right? That would count as long as when you go to sell those securities and take the money out to be fully liquid, you're not being penalized in that process.
Okay. So that would count brokerage accounts, right? That would count, of course, cash at the bank. If the client is over 59 and a half and there's no penalty, it wouldn't come out of IRA, no penalty. So that would count. And then the point that you said about, hey, the more you put down, your interest rate may creep up because that's going to leave you less liquid. It's going to leave you less options or altitude, right? If we're thinking pilot. What if you put the minimum, the 15 or 20% down, and then you just decided to pay extra each month? Could the client do that without a prepayment penalty or anything?
Yeah, so it totally depends on what your goal is. That's another thing that we work with our clients is in our initial screening call, we say, look, how are you trying to utilize debt, right? Is it, hey, I'm going to use this, but then I'm going to pay down aggressively over a short period of time? That is a good fit for a certain bucket of lenders. There's other buckets of lenders that say you can't pay $1 above what your monthly payment is for the first 2 years.
So that's really good to know.
Or else you're going to start getting penalties. There are others that say, look, if you want to pay it off in 6 months, pay it off in 6 months, right? If you want to refinance in 6 months, refinance in 6 months, right? I have a client that is in Tampa, Florida. He is an emergency room doctor. This is a real life example. Emergency room doctor bought a Piper M600, right? So very strong financial buyer. He had almost no debt. This was his first, big debt purchase. He had money in money market accounts and he had a lot of investments kind of that were illiquid. He had a lot of retirement accounts. So he was a savvy financial buyer. He said, look, I am going to take out the maximum amount that the bank's going to let me, but I want the option that if I have a windfall in 6 months, that I can buy it down, pay it off, do whatever, right? So we paired him up with a lender that has that flexibility built in. Had he gone to another lender that said, nope, no way, he's stuck for 2 years. So he's stuck at that 7.5% interest rate for 2 years. Doesn't matter what you do, or you're going to pay a prepayment penalty. Standard prepayment penalties, some have 1% prepayment for the first year. Others have a 3-2-1 prepayment. So 3% the first year, 2% the second year, 1% the third year. It just totally depends on the lender. And that's where we work with our clients and say, hey, let's get a full picture for you, see what you're trying to do, and then we'll align the debt to match that.
Yeah. So in that 321, is that a percentage of the outstanding balance?
That's correct. Yep.
Okay, cool. So I want to recap a couple of things you said. It's kind of easy to think about, right? So single engine piston market or twin, in terms of down payment, you want to be thinking about 15 to 20%. In terms of term and amortization, you can thinking about 15 to 20%. And then right now in current interest rate environments, from 7.5% to 9% or so. So, 15, 20, 15, 20, and then interest rates are 50% of those two numbers, which I thought was fun to think about. So the thing though is I want to, obviously my listeners know, hey, this is the Pilot Money Podcast. We do financial planning for pilots. When we're thinking about an airplane purchase, unless this is for some business that you have going on, some side business outside of the cockpit, airplane purchases are what I'm going to consider an abundance goal, right? So you think about the price of the purchase, number one, the use of it, the down payment, and the interest rates. This isn't like, hey, should I fund my emergency fund, or should I fund my retirement, or should I buy this airplane with Preston? This is an abundance goal. We're doing all the things. We've got all the boxes checked for our financial plan. And then it's like, hey, look, we've built in this flexibility. We've built in this option for us. We've worked hard. We've accumulated our assets. And now we want to enjoy some of it in the way of flying GA. So, of course, want to make that distinction.
Yeah. And I would say too, when you're working with your financial planner, I think bringing this up early in the conversation in kind of the initial, hey, my dream, I'm an airline pilot, but I love GA. I'm looking for a Mooney, right? We've got a ton of airline pilots that love flying Moonies because they're relatively inexpensive
like to go fast.
And they're fast, right? Yeah, exactly. And so, they're saying, hey, I want to buy a Mooney. I think my budget's going to probably be between 150 and 200,000 because I don't want to do a whole lot of maintenance and interior and all that kind of stuff. That's what my goal is. You and your financial planner can set up, if that's your goal, you really don't want to be plowing 80% of your savings into illiquid IRAs. Because at the end of the day, when you go to finance that aircraft, that IRA does not count towards your total liquidity picture. You want to have some money market accounts that there's no penalty to pull it out early. You want to have brokerage account. You want to have kind of a blended picture that's less, let me pile it into this illiquid asset of an IRA account that I could never access, and that's going to make financing the aircraft more challenging. You want to say, hey, okay, this is my purchase price. I know that I'm going to need 20% down payment, right? So I need 20% in just my fund money cash account that's earning 5% in today's market and some sort of high yield savings account. Okay, you got that. Now you've got kind of here's my backup liquidity as I create the full credit financial package, which is my brokerage account that's maybe making 7, 12% if you're killing it, right? But it is accessible and it's going to, cover my grander liquidity picture. And then on top of that, I'm going to have this type of retirement savings above and beyond what I'm doing with the airline, right? So really thinking about where you're at liquidity wise, so that when you go to finance the airplane, it's a breeze as opposed to saying, you really need another 10 grand to really make this whole thing fly out.
Yeah, I've got this beautiful net worth statement, but it's all locked up and I can't touch it. Yeah,
exactly.
That's tough.
Yeah. I don't know if you work on this with your clients, but have one handy and ready to go that's really clean and clear. We do need those most of the time when you're buying an airplane, just to be able to show, here's a global picture, here's the cover letter of my loan application that says, here's how much money I've got, here's how much I'm worth. You can go find all the supporting documents here, but here's kind of the general snapshot of it. So be sure to keep an up-to-date personal financial statement.
Absolutely, yeah. So the clients get one with their first financial plan, and then we update it every year, typically during spring review. So, and then it's no big deal to generate a quick one if you guys need something sooner. I want to talk about this because I know we're coming up on time. We've got the big transaction. What else should a potential aircraft owner be thinking about beyond or before the transaction itself? I know that's a long list.
There's transaction costs that go into it, right? It's kind of like buying a house, right? You got to pay a couple of different people to help you set up the transaction and put the lien on the airplane and all that good stuff. Beyond that, one thing that I suggest to clients is, we're talking about a really liquid high yield savings account, very low downside. Put a little bit every hour that you fly in there for a maintenance reserve account. Doesn't really matter where you have it, but I just have it handy. That way, when it's time for an annual, go get a quote for an annual from your mechanic and say, how much is it going to cost me? And then take that, divide it by the amount of hours you fly. And for every hour that you fly, you're going to pay gas, you're going to pay your annual kind of deposit, right? And then maybe a little bit of a maintenance fund, because what happens if you need a tire or a brake or whatever, right? There's so many things that can go wrong, not wrong, but that can break on a GA airplane. And you really want that thing. You don't want to be gambling. You don't want to be gambling while you're up there. And so bank a little bit of cash for the actual maintenance events that will come up, right? So be liquid there. That way it's not surprising you. Be thinking through that. Set up your hangar beforehand. There's a hangar shortage nationally. I know here in Chattanooga, if I was going to go buy an airplane, I'd have to get on about a year and a half to sometimes some airports are 5-year wait lists, right? So go get on the wait list now. If you're even thinking, hey, I might be getting one, go ahead and get on the wait list, because, once that time comes, maybe the hangar's available. So now I can go buy the airplane, right? So think through hangar, and then insurance too. You want to have adequate, if not better than you need, insurance, right? The bank is going to require you to have insurance. You cannot self-insure and finance an airplane. Same way with a car. There are limits that you'll have to have. The bank will need to be named on the insurance so that in the event of something happening, the bank is being made whole on that. And so, but, carry insurance, all the other fun stuff, right? You want to save up for the A30 headset. You want to save up for the glass panel upgrade. One thing that a lot of people don't understand is that you could actually finance an engine upgrade or a panel upgrade or an interior upgrade or a parachute repack. There's a lot of things around the transaction that you could actually finance into it, right? So it's a forced depreciation, right? So like, let's say you buy a $100,000 airplane, you put a $30,000 panel into it. Now it's worth 170, right? That's forced depreciation. You can do that in the transaction, in the closing. Do it at the beginning. If you're planning on doing it like in the first 1 or 2 years, go ahead and do it in the beginning. We can finance the entire thing. Let's go get you the quotes for the avionics upgrades. Let's go get you the quote for the interior upgrade. We'll build that whole package. As long as you qualify for it from a credit standpoint, you can go ahead and do that on the initial transaction.
I'm glad you brought that up, that besides the transaction itself, there's other things that you could roll into the closing avionics upgrade, which I know is a big one if you're buying an older aircraft, right? You want glass. You
want to put that G3X in there, right?
That's right. So I want to just recap though. So of course you're going to do the pre-buy inspection, like do that. And you're going to have maintenance. Like, guys, this is your lives. This is your family lives. You don't want to, get sidetracked with, hey, here's just the transaction, but I'm going to go skinny on maintenance. Don't be like overly optimistic on maintenance. No, we want a maintenance fund happening. And then you talked about a hangar. Where are we going to keep this? You might be tempted, I'll just keep it on a ramp. But man, if you're buying, something that's maybe newer and at a higher price point, you might not be happy with it on a ramp, right? Like maybe there's a community hangar, or, you can get your T hangar, or I know here in Charlotte, to your point, hangars are few and far between. Individually owned hangars are few and far between. You're probably looking at some community. And the one thing that you mentioned insurance as well. And the one thing that you didn't mention that I like to think about is some states have a use tax as well. So just make sure that there's no surprises as on that. I know before I let you go, for the past couple of years, it was almost like a ritual, man. Saturday night, I'd put the kids down to bed. I'd grab my flying magazine and I thumbed through. And then I started to see this advertisements and these write-ups about the fields. We're going to have you back on for a whole deal, but tell the people what the fields are for anybody who's thinking about aviation real estate and, where they can learn more about it.
Yeah, so the Fields is a fly-in community that we're building outside of Chattanooga, Tennessee. Tennessee is a great state to retire in. It's a great state to live in, very low tax state. So we are building it outside of Chattanooga. We just got some final approvals last week from the state. So we are looking to break ground here any day now. You can go to flythefields.com to see a full overview, but it's a 4,300-foot runway, taxi lots. You've got a hangar at your home. We've got hangar homes, which are a home over top of a hangar, kind of a hangar condo. There's, large estates and kind of the entire gamut of it. But yeah, we'll definitely have to come back on. But we wanted to build a media center on a runway, and that led to building one of the most innovative and largest master planned communities involved around real estate and aviation. So there's a runway right down the center. We'll have an FBO. We'll have a restaurant on site. We'll have an on-site grocery store. And you can see all the plans at flythefields.com.
There it is. So if you're thinking about retiring in Tennessee and you don't want to drive 30 minutes to your airplane, you can think about the fields. Or if you're thinking about a vacation property, a second property that you'd like to go through, because it's not only just the aviation, but you guys have all the amenities. I mean, if you're an outdoors person, horse person, all the rest that's going to happen there. So big deal. You can check that out. Preston, how can folks get in touch? Let's say that we found the airplane that we want. They've done all the financial planning with me. They are ready. How can they get in touch with your team to start that process?
Yeah, super easy. Flyingfinance.com. And there's a form fill at the very top of the website. Fill out your information. We'll give you a call. We'll jump on the phone and talk through what your options are. Somebody from our team will reach out.
Well, Preston Holland, Chief Commercial Officer of Flying, thanks so much for joining the Pilot Money Podcast.
Hey, this was fun, man. I appreciate it.
That brings us to the debrief section. What an exciting conversation that was. And I told you in the beginning that we had an exciting conversation we had. So if airplane ownership is something that you were thinking about, it is absolutely doable. I can see my DA62 in my mind already. It has incredible ramp appeal. The leather still has the new smell to it. I've got a big family, so we can load everybody up. We can fly fast and we can fly high, and it's going to be awesome. So whatever your airplane ownership dream is, let's get to it. The three things that I want you to think about, though, from today's conversation is this. Number one, airplane ownership is an abundance goal. Unless you need it for business, it's not this tool that you're using in most cases. So in a lot of cases, it's going to be an abundance goal. You've been doing the financial planning. You're working on the investments. You know the cash flow can support the purchase. You can service the note. And it's going to be something that you can bring on board, and the decision is not going to haunt you. Even if you don't get to fly it as much as you want, you're not putting yourself in a position where you're cutting any corners, either for your own financial future or currently in the aircraft transaction. So you're not cutting any corners there. So it's certainly an abundance goal. Number two, this is a tactical point that I think is important and worth mentioning. So you'll notice how Preston said if you're under the age of 59 and a half, the retirement accounts that you have will not count towards your overall liquidity when the banks are looking at you. All right. So this means that you'll want to have non-qualified accounts or brokerage accounts, cash in the bank, et cetera, to help with this goal if you're planning to purchase an airplane under 60 years old. And so this has a direct impact on how you build your portfolio. Now, if you've been listening to other episodes of the Pilot Money Podcast, primarily episode 13 and 17, where we discuss the impact of airline NEC, the impact that has on your savings rate, then I would encourage you to figure out what your savings rate should be and then do that. And then you can save on top of that, but you can enjoy the flexibility of other kinds of accounts, right? So outside of the 401k or Roth or TSP or whatever kind of retirement account you're using. The other takeaway from episodes 13 and 17 that is applicable here is the power of compounding. It works if you just simply give it enough time to work. And so if you want to buy an airplane, let's say in 10 years, you start now, right? So keep your primary goals in focus, but then you can save a little bit towards the airplane purchase and allow the market to do some of that heavy lifting for you. That's a tactical point that I want you to take away from today's conversation. Just be careful how you build your portfolio. And then point number 3 is I want you to consider the costs beyond the purchase. So Preston brought up some excellent points to think about when considering an airplane purchase transaction. Some costs beyond that transaction, though, include known maintenance costs, unknown maintenance costs, insurance, hangar, space, avionics, and interior upgrades. And as you're running the numbers, I'd recommend don't be too rosy or optimistic on these costs. And a good dose of realism, should be used here. And you should also stress test the situation. Would I be comfortable if these costs were 10 or 15% higher than I expected? And then Preston also mentioned that if you plan on upgrading the avionics or interior in the first year or two after acquisition, that they can roll that cost into the initial loan. That's interesting. I wasn't aware of that, actually, before he shared that with me. So that's something to think about. So if you've enjoyed this episode in terms of what to think about when buying an airplane, be sure to stay tuned for our next interview episode in a couple of weeks, where our guest has owned not one, not two, not three, but a handful. I'm going to leave the number for that interview, but a handful of airplanes during his ownership journey. and we get into the nitty-gritty on what to expect from the ownership perspective and really dive into the cost beyond the transaction. So with that, thanks friends for joining the Pilot Money Podcast, and we'll see you next time. Thank you for joining this episode of Pilot's Portfolio. If you found this information helpful, spread the word and share it with a pilot buddy. Or if you have questions and there's something that you would like to hear discussed on the show, send us an email. You can find the address in the show notes. For those of you who are ready to learn how we help professional pilots with their financial planning needs, schedule an appointment. Until next time, keep the shiny side up, and we'll see you on the next episode.
Pilot's Portfolio is hosted by Timothy P. Pope. Timothy P. Pope is principal owner of 360 Aviation Advisors. 360 Aviation Advisors is a registered investment advisory firm regulated by the state of North Carolina in accordance and compliance to the securities laws and regulations. 360 Aviation Advisors does not render or offer to render personalized investment or tax advice through Pilot's Portfolio. The information provided is for informational purposes only and may not be suitable for all investors and does not constitute financial, tax, investment, or legal advice. All investments involve a degree of risk, including the risk of loss.